So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Welcome to another edition of Cattle Chatter. I'm Susan Littlefield with the American Ag Network, and today's Cattle Chatter is being brought to you by John Deere. Turn your hay and silage into consistent, dense bales with John Deere round balers. Precision features, integrated technology, and dependable performance you can count on. Brad Kooima is joining us today. He's with Kooima, and Varilek out of Sioux Center, Iowa. You made a statement before we started this program. And by the way, a big shout out and thank you to John Deere for their sponsorship. You said the market kind of feels like they're run over and being drugged by the bumper. And I think that is probably encapsulating what everybody out there in the cattle industry is thinking right now as we ride another crazy roller coaster ride.
Well, for sure. Yeah, thanks for the I've got all kinds of those stupid little sayings taped to my inside of my desk. I have to compile them maybe when I retire. Thanks for having me on, Susan. I enjoy this program a lot. The volatility in the market is without precedent, in my opinion. We had some volatility like this back in 2015 and 16, but then it was just like it'd open 50 higher and then wham, it'd be down $2.50, $3. Here, it almost, I said to Joe this morning, I said, well, let's see, it was down yesterday, so I suppose, the sophisticated analytic research that we are, but probably means it'll be up today. I mean, I was kidding, but not kidding. The volatility coming off of that, what's Secretary Rollins going to say that we were worried about on Friday, where we were sharply lower, making the assumption incorrectly that she might say something about opening the border, come back over the weekend. No, nothing, big deal. And so we're sharply higher. I'm staring at the chart here. It's ironic. We're basically steady with where we were 5 days ago. It doesn't feel like that on futures is what I mean. Up, down, up, down, up, down. It's easy for the trader to get chopped up because you have a tendency to freak out when it's sharply lower and go, maybe I better sell some, and then it turns around, it's sharply higher and go, oh no, I guess it's going to go higher, and take a breath, try to sell dips or to sell rallies and buy dips, not the opposite of that, but it's hard to do. The volatility up here and that kind of price action, frankly, Susan, is typical of a market that's either bottoming or topping. So let's be realistic here. I mean, we're at all-time record prices, and so that adds to the uncertainty for sure.
What kind of chart damage are we having to deal with after last week?
Well, the last 2 weeks, there's no doubt about it. We did it. I think I quoted with you here a number of times that keep an eye on the 20-day. That was where some of those long-term funds were watching, and we took that out and had a real tough sell-off for the next day and a half after that. And now we haven't been able to recapture that. So if you're wondering, I'm a kind of a fundamental nerd, as you know, but if you don't trade the technicals, you're a fool. I mean, because that's what the funds are doing. So that level I'm watching is basically 236.85 on December today. Now that moves around. So that's a spot that I would look at, expecting to find some selling against that level. We did take out what was a very, very nice parallel uptrend line here. We also took that out the day we went through the 20-day. So we've got a chart that doesn't look like a wreck, but it isn't that same, rock and bull market that we'd had for months and months. So I would just assume that we didn't close below the 40-day. That would accelerate the selling. If we're going to get analytical here, that number's 232.85. So a close below that would trouble me. We've traded below it 2 days in a row, but we just always come back good enough on the close to get back above it. So that's a good sign.
The South continues to beat up on the North when it comes to number availabilities at this point too.
I hate being right. No, just kidding. You and I talked about it for a couple of weeks. The expectation that the South is probably going to go premium to the North, as the reality of 10 consecutive months of record low placements in Texas is the difference. It's a macro fundamental. It's a big deal. They have very, very, very tight supplies of fat cattle there, and so they finally are premium the North. I smarted off about that for weeks on end too. How funny where the regional imbalance that they're not higher. They don't do as good a job of negotiating cattle there as we do up here. Their cattle quality is not as good as it is up here. But finally, when I think you have such a major supply issue like you've had now, that's what's happened. So they're at 240 basically today. We were at 237 early. It got a little harder to get as the day went on here, more like 236. So they're officially premium us. So we'll hopefully the exporting of cattle down to the whatever the freight difference is going to probably be where we're at here for a little while. And Susan, there's a few cattle sitting around in the north, not burdensome, but we're not maybe that pulled ahead thing like I had talked about for a long time, where we sold next month's cattle this month. I think guys are reacting to high price feeder cattle, cheap feed, perfect weather. Cattle are performing, and so maybe these cattle just a little bit bigger than they have been here. Not don't get misunderstand, but we're not quite as current as we had been, say, a month or 2 months ago.
Do we know the percentage of cattle that are leaving Iowa, Nebraska, going to Kansas, down to Oklahoma, etc.?
No, I don't
Okay.
anyway. That might be a little bit difficult. So much of that sort of thing is anecdotal, where you hear like, oh yeah, I know a guy there in Northeast Nebraska, his cattle went to Garden City, and I know this guy from Kansas and his cattle are getting hauled all the way to Amarillo. I don't know, when you're looking at numbers that are like 20% less in Texas than on feed, there's going to be some sucking sound down there where these people are going to, they're going to have to absorb some of those cattle down there for sure. The density of the killing capacity is a little bit overstated. I think a lot of people think that there's all kinds of packing plants in Texas. Really, the concentration of packing plants is really more Northeast Nebraska. Generally speaking, you throw in Grand Island and then the Omaha plants, the Dakota City plant. Yeah, we have the ability to kill a lot of cattle here too, and that's good.
So let's take a look. You talked about the weights being bigger, but bigger load counts as well. Is that what we're going to start seeing?
Two things here. The weights continue to seasonally rise. And the regional weights continue to dominate, and that is that Texas and Kansas weights are much, much, much above a year ago and much above normal compared to Nebraska and Iowa, which are slightly above normal, trending up like they always do this time of year. Part of that's the weather, part of that's because we're feeding long-fed calves. That's what's fat this time of year, right? So that's part of the weight thing. And it does, though, unfortunately, kind of fit with what I was talking about earlier, that maybe we were slowing down our marketing pace a little bit, and that's probably why their weights are up a little bit too, Susan. As far as the demand or the box beef count, unfortunately, we were right on that. We talked about the seasonality of what happens in September to boxes. Well, they usually go lower, and they have. Now this week, I finally are seeing a little bit of a notable uptick in the load count or the volume of boxes that are trading. So it would appear like maybe we're getting down to prices now where we're attracting some demand, right? I think don't jump on that horse real quick. I think we got a little ways to go here yet. Typically, we'd probably see a slower demand period here as we go all the way through, well, really all the way until, unfortunately, into November. One of the seasonal stuff that I watch typically would be that week of Thanksgiving is a time when I start to get a little more excited about, fourth quarter purchases. A week before my birthday is a time when I look for lows. Yep. Everybody knows when that is, right? We've done this so many times. December 15th. Okay.
Yep, I was just going to say it, but you beat me to the punch.
Anyway, I just think the market maybe is going to have a little pause for the cause here yet. Okay. I know everybody likes it when I'm bullish, but I think we just got to be a little patient here for a moment, clean up some of the cattle in the north, and the overall supply of cattle hasn't changed. It's still very, very tight.
Yeah, I had to laugh because I saw the notation of it coming out. We got a Catalon feed report, which, as you and I are talking, those numbers aren't available yet. But what made me laugh was a statement came out and said, well, we expect placements to be smaller than they were a year ago. And I thought, that's rocket science, right?
Yeah,
because we've been talking about this for how long?
Yeah, nice going, Einstein. Yeah. The guess is down about 9%, which here, if it comes in on the guesses, okay, you'll have the lowest placement number for August since 2015. Okay, any historian knows that 2015 was not a good year for cattle.
No.
We'll have the lowest number on feed, the lowest marketings also in August compared to 2015. Okay, so I only say this, guys, is because at some point it's like trading a drought market, right? Corn goes up because it's dry, so it goes up because it's dry, so it goes up until it doesn't anymore. You know what I mean? And finally, that's in the market. That, okay, don't tell me something new. Yes, the numbers are very tight. I get it. 99% on feed, by the way, only 1% less. Just saying. So you have that, and at some point, the market, something else happens. 2015, the pit closed, and I think the market changed. It's entire characteristics and personality, and some other issues here with some economy stuff. And then we got backlogged, and then we got behind, and we lost our leverage, and yada yada. So anyway, let's keep our leverage. Let's use our head, and stay friendly, buy some puts. I mean, I've said that 100 times too on your show. So that's how I'm operating. I'm a little more cautious right now, as you know, and I have been for about the last 3, 4, 5 weeks already. So,
all right, best way for folks to get a hold of you.
Well, you can check us out at our website, kkbtrading.com, but we'd rather have you call 712-722-0023.
And that is another edition of Cattle Chatter being brought to you by John Deere.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.